A single rumor moved the entire bond market in less than an hour this week. One headline crossed the wire, oil dropped $6, and the 10-year yield reversed course before the trading desk even finished lunch. This is the kind of week your clients are walking into a holiday weekend with, and they're going to be looking to you for clarity on Tuesday morning. I am Ron Siegel, certified liability advisor, helping families build wealth through strategic debt management. This is your weekend update for the week of May 22nd, 2026. Let us start with the bond market because everything else this week pivoted off of it. As we record, the 10-year Treasury sits at 4.57%. Last week, we were at 4.59%. That's a modest 2 basis point improvement, but the path to get there was anything but quiet. Earlier in the week, yields spiked on news that Iran wanted to keep its enriched uranium in the country and restart drone production. Then on Thursday afternoon, a single headline about renewed U.S. and Iran peace talks reversed the trend in under an hour. Crude oil dropped from $108 a barrel earlier in the week to roughly $96. The energy story and the rate story are now the same story. Here's a second piece you need to know. The April Fed minutes came out and the tone was hawkish. Several members signaled they would support a future rate hike if inflation stays persistently above the 2% target. At the same time, the new Fed chair, Kevin Warsh, was sworn in this week. The market is now reading every signal from his office. A firm stance on inflation from Warsh could actually help the bond market over time because it would signal serious intent to bring price pressure down. So what does this mean for the housing data? Building permits rose 5.8% month over month in April, and housing starts came in at an annualized pace above 1.4 million units. Both expectations, but most of the strength was in the multifamily, not single family. That matters for your clients. More rental supply over time helps keep rent growth in check. The single family rent index for March rose just 1.3% year over year, down from 2.7% a year ago. Rent is cooling. Wages are not. That spread is where opportunity lives for the household balance sheet. Now to the rates your clients are watching. These are national averages from Mortgage News Daily, not an offer to lend. The 30-year conventional sits at 6.65%. The 30-year jumbo at 6.76%. The 30-year FHA is at 6.19%, and the 30-year VA is at 6.21%. Most people watch the headline number. The professionals in this audience know that the spread between these four products is where the real planning conversation lives. This week, we have shared 4 articles for you on the dashboard. The smart buyer doesn't negotiate price, they negotiate payment. Reverse mortgages aren't a last resort, they're a Swiss Army knife of retirement income. I used to think paying off debt always helped credit, then my score dropped. And your 529 won't save you, your mortgage strategy will. Each of these is designed to give you a conversation starter with a client this week. You'll find them on the right side of the dashboard or below the video, depending on the device you're using. We've also put together a complete suite of financial illustrators, complimentary for our referral partners. This week, we are featuring the Rate Reduction Illustrator. A client enters their current mortgage balance and their current interest rate. They then enter the rate they want to be at. The illustrator shows exactly what it takes to get there. For an advisor, a CPA, or a realtor, this turns an abstract rate conversation into a concrete number on paper. If you'd like access to the full suite, the link is rsrlinks.com/calculators. That's rsrlinks.com/calculators. And as you know, strategy beats rate always. One more resource for your clients, KeySteps, is a free platform offering credit monitoring, identity theft protection, and household budgeting tools all in one place. Visit rsrlinks.com/keysteps. That's rsrlinks.com/keysteps to share it with a client. Looking ahead, the markets are closed Monday for Memorial Day. Tuesday brings the May Consumer Confidence Read and the FHFA Home Price Index. The main event arrives Thursday with the Fed's preferred inflation measure, the April PCE reading, alongside the Q1 GDP final number, April durable goods, and April new home sales. Friday closes the week with the May Chicago PMI. The PCE print is the one to circle. It will set the tone for the next Fed meeting. That's your weekend update. We wish you and your families a peaceful and meaningful Memorial Day and we remember those who paid the ultimate price for the freedom we enjoy. We appreciate you listening, and we'll speak to you again next week.